Can Bitcoin make it to $100,000 this market cycle? In today's video, I'm going to explain to you why I believe this is going to be the case. Also, I will disclose, Bitcoin is not one of my biggest holdings. In fact, it's about 1/7 the size as my Ethereum holding. However, I do want to see where Bitcoin will go, because right now, Bitcoin is the king of cryptocurrency, and where Bitcoin goes will dictate where all of the altcoins go. If you enjoy the video, it would be much appreciated if you could like and subscribe to the channel to help me get to 300 subscribers. Also, remember, these are just predictions and they are not financial advice. So, let's get into the video. Now, presumably you know what Bitcoin is. But if you don't, all Bitcoin is its digital money. It has a supply cap of 21 million, making it scarce. Its proof of work mechanism is highly secure, and a lot of people view it as a digital gold, where you can park your money in a secure store of value that is scarce and should appreciate over time. The appeal to Bitcoin as a digital money is that it's actually decentralized, so it's controlled by no one. This means you can make transactions of monies without intermediaries, so you won't need to use your traditional banks to transact money, and it's a lot faster and more efficient than using money for large transactions. If you want to send $800 million to someone, using Bitcoin is actually substantially easier than the banks. However, I do like decentralized finance significantly more than Bitcoin. This is because DeFi is programmable money, and I believe this has a far bigger TAM than Bitcoin. However, that's for another video. So, the first thing we are going to do is we're going to look at a bunch of different indicators for Bitcoin. What these indicators are going to do is they're going to tell us where Bitcoin used to top out at, and we're going to have a look at these indicators to see if it looks like a top is coming in for Bitcoin or if nothing is really happening. And you won't be surprised to find most of these indicators don't signal a top right now. In previous years, when these indicators topped out, Bitcoin had a huge crash, so these indicators really show what is happening with it. After that, we'll look at the data science and statistics, and all of this will help us find where Bitcoin will top out. It's not a completely random YOLO where Bitcoin will top out, it's based on data science and statistics. So, the first indicator we're going to take a look at is the reserve risk indicator. All this measures is the risk to reward balance relative to the confidence and conviction of long-term holders. So, what this is basically going to do is it's going to measure how strong the hands of the Bitcoin hodlers are. Will they hold on to their Bitcoin at all times, or will they not? Now, if we take a look at the Bitcoin holding measurement, we can see that all of these people are really diamond handing it. There's not much selling pressure on Bitcoin from the long-term holders, and we can see this through the charts. Every time it gets up into the red band, the reserve risk ratio, which is just over 0.02, we can see there is a top for Bitcoin and it crashes back down. However, it is right now nowhere near this. The next indicator we'll take a look at is the market value and realized value. Market value is just your normal market cap, and realized value takes the price of each Bitcoin when it was last moved, so it measures the movement of Bitcoin. By subtracting realized value from market value, we get unrealized profit and loss. So all this really does is it measures the ratio between Bitcoin's market cap, so how big Bitcoin is, and investors taking profits. And as we can see, this is looking a little bit high right now. It's in the greed stage, which it is every bull market. However, it's yet to be at the euphoria stage. As we can see on the chart, it needs to be up at around 100,000 to signal a local top like it usually does. So this indicator is not signaling a top. Another one is the Puell multiple. This measures if Bitcoin miners are taking profits. And as we can see right now, Bitcoin miners are currently not really taking profits on their Bitcoin. So the Puell multiple is showing a top is not in either. And we can keep going. The MVRZ score is another model, and this is yet to show a top either. It has some very distinct tops, and we look like we are not near one on all of these models. Now, the most popular model of all is the stock to flow model. This is used for all commodities and stores of values that tend to have limited supply and are quite secure. So all the stock to flow model does is stock to flow ratios are used to evaluate the current stock of a commodity, so the total amount available, against the flow of new production. And this has been amazing at predicting Bitcoin. Bitcoin has almost followed this to a T. It continues to follow the stock to flow model almost exactly. As we can see on the chart here, it's just following this straight line up. If it continues to follow it, it's showing Bitcoin is likely to get above 100,000 this market cycle, and it has constantly followed it previously. As we can see in the previous market cycles, Bitcoin went a bit extended from the stock to flow, however came back down, and this is diminishing over time. However, it really does look like Bitcoin is on a good growth trajectory here if we follow this model. So there's a whole bunch of bullish stuff for Bitcoin, and right now the Bitcoin whale addresses are increasing, so it doesn't look like we are at a local top for Bitcoin. That's what I've tried to show you right here. I don't believe we're at a local top for Bitcoin. Instead, it looks like we're in the middle of the cycle, and I hope these metrics can help you understand that. Alright, now we're going to take a look at the charts to see some data science and see where Bitcoin will go on a macro time frame. There are two important trends that we are going to be looking at right now. These trends are: where will Bitcoin's price go? So what are the returns like? And as we can see, there have been diminished returns. So we're going to talk about diminished returns each year. And then we're going to look at the cycles are extending every year, which is another important trend. All I need is these two trends to tell where Bitcoin will go or predict where Bitcoin will go, because I don't know. So the first trend, as we've said, is returns. Now, if we take a look at this chart, all I've got here is the previous local tops. The 2011 top was around $32, give or take. This then went up 40x to the 2013 or 2014 top, which was at around $1,167. So the first cycle from top to top, we got a 40x in our Bitcoin value. Some insane returns given it's top to top, not bottom to bottom. If we're talking to bottom, it's about 2,000, 3,000, 4,000x. Now, another thing to take note of is the next market cycle, we didn't get 40x returns. If we did, Bitcoin would have gone to $40,000. Did it go to $40,000? Unfortunately, it didn't. Instead, Bitcoin did a 20x. So, still amazing gains. $1,000 to $20,000, yeah, that's really good. I'll take it any day. But it's not the same returns we were seeing before. So, the returns are objectively diminishing. You can't actually argue with this. So, we only got a 20x. This cycle so far, we've done just over a 2x. We've gone from 20,000 to 50,000, a 2.5x. Now, this does seem a little bit too diminished. They're diminishing returns, but the returns are not going down that quickly. If we followed this same pattern, we'd get about a 10x. If we did that, Bitcoin would hit 200,000. I think it's going to be even more diminished this cycle because of how much money it takes to move it. So I think if we got something like an 8x or a 7x to 140,000 to 160,000, that would be realistic for Bitcoin this market cycle. Now, the next trend I want to have a look at is the market cycles are shortening. The first cycle, the yellow band, is the 2014 cycle. As you can see, insane returns. However, it lasted very short. It only lasted a pretty small space of days. Let's then move on to the red cycle. This was our 2017 cycle. Some pretty good returns, worse than 2014. However, in the end, it lasted a little bit longer. Now, the green cycle is where we are at now. This is only about the same length as the 2014 cycle, our short cycle, and we're seeing Bitcoin extend out over time. If Bitcoin follows the same pattern, all it is going to likely do is it's likely just going to extend out somewhere like this and just go up and have a little bit less returns but go on for longer. So we could theoretically see Bitcoin go even longer than the 2017 cycle, and I don't even think this is theoretically. I think this is going to happen. This indicates to me that the market cycle is going to end next year. Early next year, I would say, if we continue to see these same patterns. So, it'll probably be diminished returns. However, if this green line even goes up a little bit, this is a logarithmic chart. Bitcoin's looking at around 100 or so thousand to get to reasonable levels with these patterns, which is pretty solid, and I think that is highly achievable. It looks like this is far from over if we look at previous patterns right now. Another thing to also discuss is Bitcoin dominance is falling off a cliff. This is because typically in market cycles, the altcoins tend to do a fair bit better than Bitcoin halfway through the cycle. It's just statistics. It's what we saw in 2017. It fell down to 35%, and I believe this time we're going lower than 35%. So overall, I think Bitcoin will go even lower, and I think the crypto market cap will go to $8 trillion. $8 trillion is generally what it's been doing if we follow the same patterns I've been discussing, and I think somewhere between 6 to 8 trillion would be adequate for this market cycle, with Bitcoin at around a 33% market dominance or even lower. Alright, so let's conclude what we found. I believe total crypto market cap's going to $8 trillion. Bitcoin's market dominance will drop to 33 to 38%, perhaps lower. Bitcoin will then reach a market cap of 2.64 to 3.04 trillion. That's what I think Bitcoin will get to this market cycle, somewhere around the high $2 trillion mark. This gives Bitcoin a price of $141,183 to $162,000 by the end of this market cycle. Toward the end of the cycle, Bitcoin will fall in value, of course. So we're going to see all of these cryptos fall in value. However, more and more adoption is coming for cryptos, and I believe instead of 85%, Bitcoin's falling 50%, maybe less, and the bear markets will be even shorter for all these cryptos. And we'll see more extended bull runs and shortened bear runs, which is what we love, and this does happen with new technologies. So I do believe that Bitcoin has got a good chance of getting up to this market cap and up to this price this market cycle. However, I don't have most of my money in Bitcoin because I think the altcoins are going to outperform Bitcoin. Regardless, Bitcoin is the safest crypto investment right now for the short term. I would say Ethereum's safer in the long term, but short term Bitcoin, and I do see Bitcoin going places. Of course, if you enjoyed the video, please remember to subscribe to the channel. We're just coming up on 300 subscribers, so it would be much appreciated if you could help out the channel and the journey. Thanks for watching the video, as always.